fundamental truth about stock investing is that what goes up will at some point eventually go down. The use of trailing stop-loss orders is an important way to preserve gains and limit losses. Let's take a look at a simple example of how trailing stops are calculated. Here we have a purchase of $50 per share with a 10% trailing stop. The trailing stop price is simply $50 times 90%, or 10% below the purchase price, which is $45. As the stock price rises, the trailing stop price rises as well, 90% of what is now the current $60 per share price. And as we see, the stock price has now risen to $65, and with the 10% trailing stop behind it, the trailing stop price has risen to $58.50. Here we see that the stock price has now fallen back to $60 a share. The important thing to remember about trailing stops is while they can rise as the stock price rises, they cannot decline. Therefore, the trailing stop price has remained at $58.50. And finally, as we see the stock price fall further to $55 per share, the price has now fallen below the trailing stop exit point, and the stock position is exited at $58.50. Now we'll see how easily trailing stops are calculated with ExitPoint. We start by clicking on the Calculate Exit Points button here, and in this model portfolio you'll see, for simplicity purposes, that each of the 5 stocks listed is using a simple 10% trailing stop. Now over here is the exit point, or trailing stop price, at which the stock is recommended to be sold based on this particular strategy setting. Where does this price come from? Well, if you click on the little icon here, the little clock icon, it tells you the price at which the trailing stop is calculated against. In this case, in the case of Apple, that $558 per share represents the best price that Apple has achieved since you have entered it into ExitPoint. In other words, its personal high price. Therefore, the 10% trailing stop is applied against this price to come up with the exit point. And you'll also notice here that it reflects the date and time that the exit point price was calculated. So another important feature of ExitPoint is its transparency. Just for illustration purposes, if we want to validate this calculation, you can see here we put in the best price, which is $558, and we take a 10% trailing stop, which is 90% of that price. So we'll do 0.90, and you can see the exit point price. The calculation shows the exit point price of $502.20, and that's where it comes from. So very simple, and yet completely transparent. Finally, today we've provided the most basic of trailing stop settings for explanatory purposes. But as you see, if you click on the trailing stop setting, you will notice a wealth of choices that one can select, and we will explore some of those other choices in future videos.